We kickstart the show by telling you about the three experts who will be joining in to dissect today's market action and tell you what to watch out for tomorrow. Tirthankar Patnaik, Director Strategic Institutional Research at Religare Capital Markets, will be with us. There's of course Ashwini Gujral, Fund Manager, ashwinigujral.com on the charts. And joining in is also Neeraj Diwan, Director at Quantum Securities. Neeraj, I would like to start off with you. Given that we did, breach that 6250 mark on the downside, it was largely the global cues which directed this kind of a momentum. Do you think that, given the fact that the global markets saw such a deep cut and we were largely flat, means that now we're somewhat ignoring the global direction?
Yeah, good evening. I think it was more to do with the data, the inflation data which came post-market yesterday. There was some support which was there because the good inflation number, and that's why we didn't react as much as other markets reacted across the world. I think that was one saving grace for the day. And if you see also, some interest rate sensitive, some banks, there was some buying which was visible in some PSU banks today also. So I think some support is coming as far as the beaten down PSU banks is concerned and interest rate sensitives are concerned because of the data. Yeah, definitely the global markets are not in a good position today, but maybe that is just one-off day where we saw bad market and maybe the markets will be better tomorrow. But I think you will start reacting to the data which is coming from domestic, our results and the interest rates. What people are going to think about interest rates in the coming monetary policy meeting end of the month.
Ashwini, after a very good uptake yesterday, there is a bit of a pause that's come in, 0.5% cash. What does this imply?
I don't think it implies much. It's just up and down movement. I don't think there are any longer term conclusions to be drawn from this. Basically range bound 6150, 6350, and any rally that on the second day itself gets beaten up, I wouldn't have been surprised if even without global cues you would be down 30 points, because that's the nature of the market that is range bound. It will not show you directional moves day on day. So still I am hopeful that maybe 100 points higher is possible. But I don't think anything beyond that is possible, because there is no great momentum in any of the large caps which can push the market higher. And now, the IT index also, most of the good news is priced in. If that too starts moving sideways, banks are already weak, then it becomes fairly difficult for the market to make more headway.
Sure. Neeraj, I want to focus a bit on Coal India first before we talk about the other top movers in trade. A 29 rupee dividend, much higher than what anybody was working with. Clearly, the government is looking for more funds coming their way. What does this imply, one, for Coal India, two, for how some of the other PSUs could be dealt with as well?
I think definitely the dividend is much more than people were expecting on the street. I think almost 10 rupees higher than the expectation. And this is, I think, again, stresses the point that government is going to fulfill the requirement for the year from the dividends, because disinvestment is not really happening. Even IOC has been put in the back burner, or they're using some other measures. So there are a lot of targets which were there are not going to be achieved otherwise. So it will be more of dividend from PSUs, and it can be maybe Axis Bank stake that they're talking about. So I think keeping that in mind, I think we can expect some sort of similar action from some other PSUs also. So one needs to take the pick and see where they can expect some good dividend. And based on this dividend, I think some sort of buying should emerge in Coal India tomorrow, because 10 rupees is a big difference that is there from the expectation and what actually is coming to.
Okay, that's the call on Coal India. But Tirthankar, we were just flagging off the IT basket, and it seems like the only game town really is large cap IT. But you can see some of the mid cap IT stocks also playing catch up. At the current juncture, how would you map the risk reward?
My read is that incremental capital would be slightly cautious going into into IT, mid cap as well as large cap, mid cap especially, where we believe that unless there is a significant drop in the currency, you're not really looking at big gains going forward. There are specific stocks that we like, but in general, mid cap IT has had its day. Large cap IT, we maintain an overweight in our portfolio. We've had it for about 6 months now, and we believe there is no reason to change that. But I take your point, in terms of putting additional capital, one would be cautious given these valuations. However, given our macro view that this year would be a dollar strengthening year, one would not do anything to that overweight really.
Neeraj, let's get in your expectation from Yes Bank and the overall banking sector as a whole, because as of now, it's expected to be a fairly good quarter for a Yes Bank. We're expecting profit growth higher by 13%. The NII growth is seen at 687 crores according to the ET Now poll.
Yeah, you saw IndusInd numbers also. There was definitely improvement as far as performance is concerned there. But then there was a concern which was visible from the slippages that we saw from IndusInd Bank. So that would be one concern, one thing to watch in Yes Bank numbers also. I think the stock has also corrected in the last 2-3 weeks by almost about 10%. So I think if they're going to have some stable numbers as far as the asset quality is concerned, I think you can see a movement in Yes Bank tomorrow after the results. So I think better to wait for the results, see how the numbers are as far as the NPAs are concerned, and then take a call on this. And as far as the overall banking space is concerned, I think PSU banks, you will get opportunity based on the inflation numbers tomorrow and the numbers, the quarterly numbers that are going to be declared in the next 2-3 weeks, because there you see a good correction after the move that we saw in November, December. So there will be opportunities there where, based on numbers, I think a lot of negatives are already built in and people are expecting things to get worse. I think a lot of banks which we talk to are talking about maintaining the same level of NPA, same level of slippages as last quarter. So even if that is the case, so you get a little bit better than that, I think those banks can do well. So I think PSU banks will have a better opportunity based on the valuation and the fact that they're beaten down. And definitely depend on, and in the private sector bank, definitely ICICI Bank is one bank which has been performing very well in the last 7-8 quarters. So that is one to watch for. That is also corrected with the other banks in this correction.
Ashwini, how do you expect Coal India to react tomorrow? One, of course, the dividend will help the base stock do well, but the futures are trading at a discount of 10 odd rupees. Do you see this widening, and therefore do you see a short trade maybe in futures?
Well, the prices will open, adjusted, so I don't think there's any trade post the announcement of the news. Had it been today, you could have done something, but tomorrow I think the difference of the cash and the futures will just widen at the open and then stay there. So I don't think there's much to do tomorrow.
Tirthankar, you had quite a few mid-cap stocks really making the moves today, the likes of Gati, Concord, TCI. What do you think is really fueling some of the price action in some of these logistics stocks, and what's your overall assessment?
They are being played from a long-term perspective. I mean, one of our picks for the year had been Gated Distriparks, again from the logistics theme. I think people are seeing deep value in those stocks. They see the government coming back on policy action. There is a lot of accelerated move happening there. We have the Japanese, head of state coming on in our 26th Republic Day, where people are going to talk about much more cooperation with Japan. And one of the things that they have sort of helped out is with the DFC, the DMIC, the Dedicated Freight Corridor. So all these logistics plays are again, one thing to play there. I think that's what is the action happening. I mean, people are taking a longer term bet on logistic plays in India, basically improving once the economy looks up, and this is a pretty good time to buy for investors who are looking at a fairly long time horizon.
Okay, Ashwini, a space that was extremely abuzz in the last 1 hour of trade today was pharma. Do you think the uptick that we saw in stocks like Aurobindo, Biocon, a couple of others, Sun Pharma for example, can it continue into tomorrow's session?
See, buy rotation for one excuse or the other IT and pharma will continue to run. And, we could spend another 5 years staying at these levels of 6,000, 6,300, and these stocks would have gained substantially. So any time, global markets are kind of weak or iffy, you tend to have this sort of rare card action from the pharma space. And basically, all these stocks have consolidated quite a bit and now are beginning to move up. So today's last hour action does tell us that it's possible that even tomorrow pharma could outperform.
Ashwini, what would you be doing, with the stocks like a Dish TV?
See, media came under lots of pressure today, including Zee and Dish TV. I don't think there is much to do in Dish TV because now even the mid caps are coming apart. So basically, it's gone into a fairly deep correction. Let's see if we can hold on to, say, 48, 50 kind of zones. But otherwise it has no great trend. So it's an avoidable stock.
Neeraj, that's the other thing. What do you do with the non-IT set of export-oriented companies? Because a lot of people are betting on these. I mean, the story in pharma has probably already started and way past, but now people are talking about, say, the coffee exporters like CCL or textile exporters, the second-rung ones like Welspun India, for example. Is there juice in any of these mid-sized, non-IT, non-pharma, export-oriented themes?
I think there is definitely juice there because you're seeing quarterly improvement there happening in the kind of dollar movement that is there. Plus there is support from raw material costs also, which has not gone up for most of them, and even otherwise service related industry also, like I had mentioned earlier on a show only, like Hinduja Global was one stock that we had covered, which is also improvement which is happening abroad, and the call center businesses seeing a traction there. And now you're seeing a lot of other reports on Firstsource also coming out, which may not be as good a quality company like Hinduja Global as far as the balance sheet is concerned. So, but there is definitely improvement there that we're seeing on the quarterly basis. So there is, even after the run-up which has happened in some of these stocks, some of the textile names, so there, still you feel that there is definitely, you can have a bottom-up approach and identify stocks where still you'll have, a lot of still upside left in the stocks. So there is that export-oriented, and plus, if people are looking at defensive stocks, so there IT and pharma are two sectors because FMCG being, which has already become so expensive, so people are not too comfortable investing in FMCG. So people are even using IT and pharma as a defensive bet in the portfolio. So that is why you'll have the support coming at these levels for these stocks also.
Let's talk about what the dealing rooms are discussing in terms of individual stock recommendations. Pranay is here from our research team with the lowdown. Pranay.
Well, we have two recommendations coming in from dealers. Zee Entertainment is a sell while Cipla is a buy. Now Zee closed down 4%, and after making 52-week highs of 300 yesterday, it gave away 3 days of gains in just one session today. So one thing to watch out for here is the MSCI quarterly rebalancing, which is scheduled on Feb 12th. And if you look at the FII holding in the counter, that currently stands at 47.25% versus the trigger cap of 49%. So the upside room over here is very narrow, and that provides no adjustment for FII buying. And therefore, analysts are indicating that the weight of Zee on MSCI India Index, which currently stands at 0.5%, may actually drop to zero as a result of this, and we may see selling of nearly 1.1 crore shares, also part of follow-on selling that may ensue. So dealers are recommending a sell, and they see a downside of 5% in the near term, and the stock may actually settle to levels of 255 going forward in the medium term. On the other hand, Cipla for the first time in 2 months climbed up decisively above levels of 410 and closed near day's high. Institutional desks are indicating a very strong accumulation where the volume action is nearly double of the last 10 days. Also, the third quarterly results are likely to beat the analyst estimates as per what our dealers are indicating, and there is a buzz that the company may soon win a drug approval from its new facility at Indore SEZ, where it has been filing a lot of ANDAs from. So therefore, dealers are recommending to buy this with an upside of at least 10% in the near term.
Pranay, thanks for that. Tirthankar, something that I asked Neeraj as well, what do you like from the export manufacturing space? Of late, names like Motherson Sumi, Arvind Mills, etc. made a comeback, as we keep on talking about how IT will benefit.
Absolutely. I totally agree with there. Agree there. I mean, that's exactly what we are saying, that, we would like export themes, and export themes like IT and pharma are well known, but one should definitely explore themes like auto export, manufacturing, import substitution in general, where, given the rupee's sharp down move in the last 2 years, people are looking at domestic manufacturing as a replacement to what they've been importing thus far. And auto proxies are fairly good from that perspective as well. Like the only problem, however, is that all of these are fairly small. Maybe a Bosch is a fairly large story, Tata Motors of course, but most of the other players, Arvind, Motherson Sumi, Amtech, Bharat Forge, these are small stocks and they cannot be large weighting in our portfolio.
Ashwini, what would be the top stocks that you'd be watching out for tomorrow?
Well, CESC is a buy with a stop of 450, target of 478. McLeod Russell is a buy with a stop of 298, target of 321. And Z Entertainment is a sell with a stop of 292, target of 275.
Okay. Neeraj, either a mid-cap investment idea or maybe a short-term trading idea as well, whichever you are comfortable with for our viewers.
I think in short-term trading idea would be in the PSU banking space. I think there some buying should emerge before the inflation numbers and the results there, because they have really beaten down. So I think PSU banks is one space where you should take your picks. And even other interest rate sensitive stock would be one, IB Real Estate, which also I feel has corrected, and you saw some support today also. There was some buying there in IB Real Estate also. So that would be one stock to look at. And besides this, like we mentioned earlier also, we are positive on housing finance companies. So there's a small stock called GIC Housing Finance, which looks good for an investment for 8 to 12 months. That can give a decent return.
Ashwini, highlight how you would be approaching Coal India for tomorrow, 289.
See, there's nothing to do tomorrow because the prices will open, adjusted for dividend. So basically the futures will be 29 points lower than the spot. So I don't think there is much to do post tomorrow.
Fair call, gentlemen, all of you. Many thanks for joining in today and giving us your views and your recommendations.